And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast, fellow futures family, friends, and traders. It is Wednesday, June the 22nd. I'm John Hoagland. Thanks for trusting me with your time. I recently discovered that there's a national day for just about everything. Today's national days: National Chocolate Eclair Day, National HVAC Tech Day, which I'm sure there's a lot of HVAC techs out there working on people's air conditioners today. So it's also National Onion Rings Day and National Kissing Day. Mwah! To all of you. So, economic numbers this morning, 6 o'clock, the mortgage applications came out. The number that stuck out most to me was the fact that mortgage rates, the 30-year mortgage rate, is averaging just under 6%, 5.98%. 8:30 this morning, Chairman Powell is due to speak in front of the Senate. That's a 2-day event. We'll all have to keep our ears and eyes open for anything that he says. I'm sure he's going to be extremely careful in the things that he says and the things that he speaks about. It might be a little bit more difficult when they start asking questions, but we can always count on Chairman Powell to try not to jerk the markets around. But we also have a couple of other talking Feds today. At 11:50, Evans is speaking, and at 12:30 we have Harker and barking again. The U.S. stocks are set to open lower with focus honed in on the Fed Chairman Powell's 2-day testimony, and it is about the state of the economy. Inflation continues to rage. The UK CPI number hits 9.1%, yet another 40-year high. Economic and inflation fears have hit crude prices as demand is in question as we get closer to the July 4th Independence Day holiday. President is expected to suspend the gas tax, largely really just a Band-Aid on a mortal wound, it seems, at this point. As always, make sure that you hit the lucky like button, share, comment, question, feedback, and heckling are always welcome. Love is always welcome as well here on the forecast. And make sure you subscribe to our YouTube channel so you get notified when we do go live. The VIX is up about 3% this morning, back up around 31.16 last I checked. Dollar index slightly higher, back up at 104.52. And the yield on the 10-year softened a little bit overnight, 3.18. It is Wednesday. We do have group coaching today. I do have a couple of questions that were mentioned in the recap yesterday. I'm looking forward to discussing them today. And if Nick Sandaro is here, I've got the answer to your question. Nick was wondering, who is the artist that did this picture behind me? Now, that's the 30-year bond pit, somewhere around the mid-'80s, but the artist's name is Gordon Halloran. Gordon Halloran. If you're here, there's your answer. And Brian Hardwork Hogan, we're going to be talking about the difficulty in graduation from trading on sim to the trading combine and beyond, even into the funded account. Good morning, Nicholas. There's your answer. Gordon Halloran. He's got his own website, Gordon Halloran, HALLORAN.com. Pretty prominent artist. He's got some pretty big pieces, including a couple here in Chicago. All right. I think that's enough yammering. I got pretty much everything that we wanted to talk about, except the fact that everything we do here is educational. We are seeking accurate context. We are always being risk managers first, and we are always remaining patient in our in our efforts to find opportunities in these markets. Your girlfriend's uncle traded in the bond pit. I wonder if we know who he is. Joel Schnackenberg. Usually my older brother's here. My older brother worked in the 30-year bond pit for a number of years, and he might know him. I probably wouldn't know him. I was more of a mercantile exchange guy in the S&Ps. But if my brother were here, and he usually is, I don't see him saying good morning here just yet, but I'll ask him, and we'll see if they happen to know each other. Ask your girlfriend's uncle if he knows Rick Hoagland. That may be a good way to start. First in the room this morning, Theo wins the prize. Good morning, Theo. Chilling with Dylan Scott Sawney. Conquered Federico Tachyon Shaw. Dead letter opener, very much over this bipolar market. And I've found it challenging yesterday. The markets are certainly, the monthly, the weekly, the daily, everything is saying lower, and I think that's one of the problems with the continuation of the downside. We're heading lower here this morning. We got some interesting things to check out on the charts here very shortly, and I agree. It seems more complicated today than usual, or that I would like. Charles March, good morning, Grim Reaper. Yesterday we had skyrocketing Dow. At some points it was close to 800 points, yet we had a tanking Nasdaq 100. It was a very annoying day. Why did this happen? Well, when you think about the components of the Dow is the blue chip, most stable, probably the highest in desirable stocks, if you will. Nasdaq's full of smaller companies. A lot of them are largely kind of overvalued. A lot of tech stocks. It's a different group of stocks, though the same kind of asset class. So, the Nasdaq, all of them kind of closed around up 1.5% yesterday. There was some differences, and you can see it in the charts, but I think overall they all held up relatively well yesterday considering the situation. But you have to remember the Dow is, there's the best earnings are in those. They're the most stable, most desirable stocks. And again, the NASDAQ has a lot of smaller, overvalued value stocks, they call them. So that may be kind of what you're looking at. Good morning, George. Mid-Country Gaming, Glitter Sandwich. Good morning, Alfred. Rob T. Bill Phillips. Good morning, Terry King. Jimmy Decker. Good to see you. Haven't seen you in a while. Nice to see you back. Dead letter openers. Spencer, good morning. Sarah Hall, good morning. Prayers and love to you as well. France Ho, haven't seen you in a while. It is a pleasure to see you back in the game, back in the forecast, and always good to see you and hoping again for your success. David, good morning. Scott Masking Duct, good morning to you. George. Lacey's basically right here at my feet, just kind of hanging out. Chilling with Dylan Hogue on the ES. Do we consider overnight movement in the filling of the gap? Is filling in the gap from yesterday? Good question. I tend not to look at that as a gap fill, but we put in an island low for the last 3 sessions. Now we've put in what appears to be an island top. I was going to discuss that on the charts, so stick around and we'll talk about that when we get to the charts. Jan R., good morning. Right back at you, good looking. Alois, I should say. Trading Research, good morning. Dimitar, Rusty Golfer, my spirit animal. Nicholas, we got you. Vince, my guy, good morning. Let's have another good day today. It's the 30-year bond pit was one of the biggest, nastiest trading pits in the world. It was, I think, even bigger than the S&P pit. It was just more people in there and more money made and lost, I'm sure. So Jerry is awake, and I hope I am too. Isaac, Scotty Brooks. Got any significant levels on the S&P and the CL? Well, we're going to take a look at that. Exclusive Quality, there's a good name for you. Thanks for being here and enjoying the forecast, I hope. Dead letter opener, manipulation. Yeah, well, It's the difference of opinion that makes these markets so good, right? This is Joe. Nicholas, we're trying to find a decent digital print of that specific one so we can see if he was in it. There's actually two. I have the other one, but I just put this one up for the background here. So there is a whole, like, another side to the bond pad. This particular picture is featured on the front page of his website, and I'm pretty sure the prints are all for sale. So check out the website. And Joe Drinden, good morning, Joe. Oh, I see. Jack Brody, Keith, good morning. Trading research for a lot about this foundation course, but I can't find it on the website. What gives? It's on our YouTube channel. So if we go to this page here, let me grab this for you. And it's on this playlist. Now, on that playlist, you're going to be able to see all the other content that we do, the forecast, the recap, coaches' playbooks, Michael Patak's drop-ins, all of that stuff is right there on that playlist. So go ahead and check that out. Stephen C., Columbus, good to see everyone. So what you're saying, Hogue, is just because the Dow is up doesn't mean the Nasdaq 100 will be up. How often does this happen? Well, like I said, they are similar asset classes, but they're their own markets. So you got to remember the Dow is 30 of the prime stocks, the most stable, the highest earnings. Well, I don't know about earnings, but dividends. And then you've got some of your smaller stocks, less fully valued but high value stocks in the Nasdaq, and some of them in the S&Ps, of course. Okay, so while we always talk about the S&P and the Nasdaq here, and usually I'm saying similar but different. They have different kind of personalities, although on the charts much of the time they look about the same. Okay, so I mean, it happens. You know, you have a tech company that falls into some sort of trouble that's in the Nasdaq that's not in the Dow. You're going to have a divergence in price on that, especially, you know, there was one of these really highly capitalized companies. Anissa, good morning. All right, let's stop yammering here. It's we got extra time today because it's not make Hogue money, but let's talk. Let's get into these charts here, and start with the daily here in the S&Ps. So yesterday we were kind of expecting a small loss in open interest. We did not get that. The June expired. A little over 482,000 June contracts expired and settled in cash yesterday. The September, we added 14,000 contracts on this push to the upside yesterday on very low volume. Now, we were looking at this yesterday and talking about the monthly chart, the weekly chart, the daily chart. Everything is pointing to the downside, and when we see that, I get a little bit careful because it's so many different time frames are looking at the same thing, maybe thinking the same thing, that sometimes the opposite happens. And we had that to a degree yesterday, and I think we've set up more of a bear flag than anything else. Long-time structure remains lower, but look where we are now. We're in an area of balance. So dead letter openers, kind of bipolar idea about this market, I agree with, because we know that there's a large community, a large block of the traders that are looking at those charts thinking this thing's heading lower. If they're already all short, we may be primed for a pullback. We did not see a tremendous pullback yesterday. What we saw yesterday was more of like a short covering rally. Even though we added open interest, it looks like we did add some new buyers, but I think overall we had a short covering event yesterday just by the shape of the profile, the P shape of the profile. It always tips off the idea that this was short covering, not new buying coming in. We did see some, not too much. Look at the volume yesterday, very low. I think a lot of folks are waiting for Powell's testimony today and tomorrow. What else do we have? It's looking like we're starting to kind of grow a coiling activity here, a triangle pattern, which I think we're going to see better here on the 30-minute chart. So here's that triangle pattern that we're looking at. Now, we've only got 2 points of contact on this. This was what I was looking at as a bear flag at the end of the day yesterday, and we've got 1, 2, 3, 4 points of contact, 5, 6 points of contact before we broke out below it last night. So something we kind of missed yesterday was the fact that we'd put in an island low here. Well, now with the gap to yesterday's P-shaped short covering session, it looks like we're going to open with a gap away from that. Does that create an island top? Well, typically island bottoms and island tops are after a sustained move in that direction that we put in the island and then we head in the opposite direction. So does this mean that we've filled the gap in the overnight? No, I don't think so. I don't look at it that way. I don't like the overnight activity other than the fact that it tells me that our direct competitors, our P shooters, might be holding on to too many shorts in this case. Settlements all the way up here, it's 37.6775, and we are going to be with a high probability opening with a gap below the range from yesterday. So if our overnight inventory gets what they're looking for, which is continuation to the downside, this gap is still going to remain a weakness in structure at some point in the future. So we've got a whole lot of overnight shorts in this market. They've reconciled to some degree, but they were unable to close the gap. Well, it's short time frame traders that are involved in this. You can always tell just by looking at the volume here. There's not a lot of multiple time frame participants in the overnight activity. So when the market opens, the overnight shorts are going to be looking for sellers to come in to kind of perpetuate this move to the upside. Look at what we did. Here's Friday's settlement. Here's Monday. All of this, all the way through yesterday, was overnight, was shorter time frame, weaker hands traders accumulating longs. They pushed out some shorts. Looking at what we did on the way up here, it doesn't surprise me that we had an increase in open interest as of yesterday. So are we too long in the short time frame here? It looks like we may be, and we're peeling off. We're centrally located in this area of balance. We have our triangle here. We have our bear flag breakout here. There's so many different hypotheses that I can come up with in this market, which goes right along with the letter openers, feeling that this market is bipolar or tripolar or even quadraphenic for you who lovers out there. This market does seem to have multiple personalities, and it's going to make it a little bit more challenging throughout our trading day. So my policy is going to be, I'm going to be patient. I'm going to look for opportunities against levels that I can limit risk. We're opening outside of balance from yesterday, so an opening range trade may not necessarily be out of the question. It worked yesterday for make Hogue money. We opted not to take it. It's okay. We'll catch the next one. But here we are. We're opening with a gap to the downside, and if we leave the opening range at one extreme or the other, that can be an indication of buyer or seller control right off the open. This trend line down here is going to be kind of a minor trend line, but I like it because it allows me to limit my risk. If this breakout to the downside does continue, we've got a relatively substantial downside move that does include probably our weekly kickoff low. Okay, so balance rules right now. Last week's high, last week's low, the extremes of the balance were centrally located. I don't know, nobody does, if we're going to see any reaction on this lower trend line. I'm thinking to the downside because this is a nice bear flag. But we're going to have to hold below this line for it to find the continuation that I think it might bring. Of course, news is something that can throw a horseshoe into any plans, and we know that Powell is speaking today, so ears on Powell. Island low, island top, questions. I guess we'll find out the answers maybe by the end of the day. Take a look at crude oil. Okay. So I guess we've got our indication here, don't we? We've got the market opened below weekly kickoff low. That was going to be somewhat pivotal this morning. Volume was pretty low yesterday. We lost 1,400 in open interest yesterday. Bear flag formed yesterday. We've broken out below that bear flag. We've broken out below the weekly kickoff low, which is 105 even. Where can this thing go? I've got it moving down to just around $98, and I'll show you why right now. Weekly kickoff low in play. Did the opening range trade play for us? Looks like it. That first minute is right here, so it's 102.48 to 79. 31 tick opening range that remains the high of the session. After a breakout of a bull flag, it looks like things are heading to the downside. So here's the 30-minute chart. We've got overnight shorts all over the place that are continuing to get paid. Here is our bear flag. Bear flag is low volume, small ranges in the opposite direction of the recent activity. Breaking out below it last night, finding support at weekly kickoff low, finding resistance then at the weekly kickoff low, more resistance here. Where can this thing go? Well, when we take a look at the bear flag, the flag staff of the bear flag is where it began and where it ended. Here's the flag staff. When we get a breakout of a bear flag, we take that distance from the top of the flagpole to the bottom of the flagpole, and we extend it from the breakout point of the bear flag, and that has us looking all the way down to about 98.20, 98.30. There's nothing finite in futures trading. So this move has some continuation in it. And why? Well, from what all the talking heads are talking about, the worry is about the economy and dwindling desire or need for gasoline. I don't know that I believe that much, but you gotta trade what you're seeing. Alrighty then. Here's the Nasdaq again. Similar situation, but a little bit different. We've got a kind of range-bound balance with some hints in it. We got the bear flag, as we do in the S&Ps. We've got a kind of a coiling activity going on here, which is encouraging for building energy. We added 2,800 to the September contract, as the June contract had 56,400 plus expire and settle in cash. We don't have to worry about that for another 2.5 months. No more rollover for 2.5 months in our equities, thank goodness. Take a look at the 30. So here's our coil. Here's our island bottom. Here's our island top. This gap remains. And I don't think that going through it in the overnight session has truly repaired that gap. Okay, so we are holding overnight shorts. Gap rules. If we can't close the gap relatively early, we look for opportunities to the downside. Where does our flagpole take us in the Nasdaq on this breakout of this bear flag? Here's our high. Here's our low. It's not going to be as fruitful, I don't think, as the S&Ps. So it takes us just the other side of the weekly kickoff low, which we have not tested the way we have in the S&Ps last week. This still remains. The weekly kickoff low in the S&Ps has moved lower. So if we do get a breakout below this level, my target is going to probably, the first one would be last week's low, and then weekly kickoff low / this extension below the bear flag. We'll see if these all play out that way. Gold. Balance. Been in balance. Still in balance. Getting a little bit of life here. We added 2,600 in open interest yesterday on a kind of a down day. Very low volume though. Volume, again, very low. Open interest increased a little bit. We're still in short time frame control here, ladies and gentlemen. We don't see that there's a whole lot of longer time frame information coming from these markets. So we're going to be, again, basing our opportunities off of short time frame levels, which you can go back in time and you can see how often those short time frame levels have been respected in this area of balance that we've been in. So, overnight inventory was pretty short to the downside. We reconciled that about on the 6 o'clock bar. We're trying to continue this move to the upside. Where are our short time frame levels that may be respected? Well, yesterday we had the previous day's high, the previous day's low. Actually, I think we had overnight low and high that were respected throughout the session yesterday. We've taken a look. We've gotten all back up to settlement here from last Thursday. I believe this was Thursday, Friday, Monday, Tuesday, Wednesday. That was last Thursday. We see that there's maybe a little bit of resistance up there. It's perhaps above Friday's value area high, where that resistance and the lack of buyers to continue has come in. This is what we do with short time frame levels, and there's a lot of them. So it's very important to really try and remain very, very patient, very patient. We did open. It looks as though we have our times right here. Yeah, that's the 8 o'clock bar. So we did open in range, but above value. Value high could be an interesting area. If we're getting too long in short time frame, a move back to settlement might be in play here. It's so easy to find levels in short time frame because there's always a lot of them. I like them because they do let you limit risk, but there's usually so many of them you can take loss after loss after loss before you find the right short time frame level that's going to be respected. So do try and stay patient. 6 euro, similar situation as gold. range bound. Let me get my notes. Volume was extremely low. Volume has just been cutting off in this area. We did add 4,100 in open interest yesterday, which is a little bit of a sign of a pulse. So balance, rules, rule. The extremes of balance. What are the rules in balance? We focus on the extremes and fade them. We fade the upper extreme by shorting. We fade the lower extreme by buying. Anything in the middle, we just want to make sure that we're using opportunities to limit our risk and have reasonable profit targets. Reasonable profit targets. Overnight inventory too short. That has now reconciled. We are in range and in value from yesterday. I don't see any big reason to get in any hurry into anything here. Again, looking at the high from last week, the high from this week, the low from this week, the low from last week. All of these are interesting levels on bigger time frames. Anything in the middle against short time frame levels are shorter time frame trades. You're not going to be looking for the home runs. You're looking for singles and doubles in this until something changes. Look at the overnight. The overnight traded to a naked point of control. We have yet to trade to that in the regular trading hour session. The overnight high was pretty much the low of value from yesterday until we just took that out. Well, we've got a couple of visual targets above here in the point of control or value high from yesterday. Do they offer opportunity? We don't know, but they do offer opportunity to limit risk. And that's the name of the game for me, ladies and gentlemen. We've got rates slipping back to the downside. The 10-year rates have slipped lower. Weekly test of weekly kickoff high, and last week's high is in order as we speak. It's the extreme of balance. So when we're looking at balance, we fade extremes until there's an acceptance outside of that balance that we go with. It seems strange to be thinking about buying 10 years knowing that rates are going to continue to move higher, but that must already be in the market. Here we've got some overnight longs continuing to get paid against an important inflection point. This inflection point allows us to limit risk. We've had no effort to close the gap. So if we do get the pullback back to weekly kickoff high, that gives me an opportunity for an execution. And I might look at that as we continue moving through the day here. Let's take a quick look at the natural gas. So we've started to kind of create an area of balance here. We know we're in rollover. This is still the July contract. We'll be trading the August contract tomorrow. Tomorrow I'm expecting the volume to be far greater in the August contract than July. 3-day balance, volume and open interest are really not going to be helpful for us because we are in the teeth of rollover, very low volume yesterday in the July contract because we're splitting volume probably with the August contract. We lost 3,600 in open interest yesterday. Again, probably largely a function of rollover. Take a look at the 30. Okay, we did close our weekend gap yesterday, unable to really find any true acceptance inside value from Friday's session. We've kind of taken a look. We got weekly kickoff low just below here. I'm really going to try and stay patient. We've fallen into a 3-day area of balance. We're in rollover. I'm kind of going to back burner this market because, again, it's in rollover, and we can probably look at some more reasonable and solid hypotheses in it next week. Doesn't mean there's not opportunity that you might be able to find, just not seeing anything tremendous for us here unless we get to weekly kickoff low, which could provide a decent opportunity for us. All right. So I haven't really been reading, but it looks like we've got a very active chat here today. I don't really know what's going on here, but hello. Carlos, good morning. Braden, he's asking if somebody has a brokerage account. I hope he's not asking me. Anyone know if this... you'd like to see some broker statements? Yeah, so would I. You guys, I appreciate you guys. It's all right. I'm sure that there's a lot of questions, but I don't consider myself about that. Hello, Cedar. All right, I'm not going to get into all of this. Brandon, if you can find something useful for in the market forecast for you, then that makes me happy. I want everybody's success. So if we can help, that's great. If not, I apologize. We do the best we can. I enjoy trading. I've been trading for a long time, and I try and help others kind of learn and look at markets in a maybe a little bit of a different way. So glad you're here. If we can help anything, I'd be happy to help in any way I can. Dead letter opener. All right. I am not going to stream Powell's testimony today. We are not at Top Stop. So I'm sure you can find it on the internet. And let's take our deep breath. Let's be ready for the trading day. Stay, number one, humble, stay grateful, stay creative, accept what the market is telling you, calm, cool, and collected. I look forward to seeing everybody for group coaching today if you want to join. Remember, Brian Hogan, we're going to be talking about the difficulties in moving from sim to combine to funded. All right. Okay, well, Braden, you're not going to get that. Sorry, you're going to have to trust me. Have a great trading day, everybody. Braden, have a great trading day. Blessings to you all. Stay kind to yourself. Stay kind with others. Say a prayer for world peace. And we'll see you on group coaching as well as the recap today. Have a great trading day.